A lot of technical selling has left the cattle sector with mixed prices as we record this edition of Farm Week. In feeder cattle, the question of whether the future is down or up is a valid one. Analyst Ted Seifert says having too many speculators in this market may have pushed things too far.
With the big run-up that we had in feeder cattle, that drew the attention of a lot of speculators. And when you get these speculators running into the market, a lot of times that will create a bubble, so to speak, and push the market maybe further than it needs to go. The other problem with that, though, is when all these speculators have their positions and they're all really long in the market, if you give them a reason to get out and they all go running for the doors, we can really drop a lot further and faster than what we may have needed to. And I think that is really the case in the feeder cattle market. Really, until we get back to a normal mix of hedgers, commercials, and speculators, you could continue to see this sort of disjuncture for the time being. And the technicals in the feeder cattle market, when we gapped lower 3 or 4 days in a row until we expanded the limits, we left these big holes in the chart. We went up and filled all those gaps, except for the top gap, we missed by 4 ticks. That's a really negative technical signal, and we've been coming back down since then. So that negative technical outlook is getting your speculators to sell. But once we flush that out and once we get back to a normal mix, I think you can find some more strength.